Hey guys, how are you? Very interesting trading day today. Wow, super awesome. So, let's get into it here. We can start by looking at the SPY. Let's see here. Okay, there's my SPY. So I've marked in all the entries and exits, and basically here, I'll show you my trades. So the first trades of the day, I was shorting puts to start, okay, around 10 o'clock, expecting the lows of the day to hold, all right? And basically I held on to this position. I actually scaled in twice to that position, and I wasn't actually happy with my first two entries because in hindsight they weren't great. You can see where I entered on the first part of that was right here on the 2-minute chart, which would have been near the top part of this range. And I didn't realize that as soon as I entered that, we were pulling back and we had rejected this 286 price another time. And I guess I just wasn't truly aware of the fact that we were likely going to stay in the range. So I entered too early on those short puts, but I entered small. So the plus to that was the fact that I left room to scale in. I scaled in again down here when we came down here, and I shorted the 284 puts expecting us to hold that price because I wasn't convinced by the amount of downside we were seeing in the Qs and the XLF in the morning. I stayed short the puts there. My average was in the 40s. Yeah, so I sold one at 40 and I sold another at 55. So my average would have been around high 40s. We came up again here and I was expecting a move higher. So I never actually cut the trade or took any profits. There was small profit, but that wasn't my profit target, right? I was expecting the market to just kind of stay in this range and eventually break higher and trap some shorts out. But we didn't get that. So what I said was, okay, well, obviously my stop is going to be below this low, this 284. So on this move down here, the held bid was around 284 and a quarter, and we saw that once and there was strong buying here, and then we actually had a second attempt, broke it by a couple of pennies, and then strong buying again, and that strong buying led us all the way back up to near this 285.50 area where we just kind of tested it multiple times. Now there were good indicators in the financial sector if you were looking at that in the same moment. So basically you can see that we moved up to start, or we had this sort of opening range to start, and we were watching the top price, which was 22.31, and this pattern right here where we were just sort of grinding with a higher low, this was indicating sort of bullish strength to me, and I thought it was likely that we were going to see a break of that high and continue in the upward direction. Although we rejected that high, we low-key rejected that high, I guess, and then we slowly faded and faded and faded and faded, and then resulted in a bear break, and I think that that caught a lot of traders by surprise. So that bear break right there contributed to the S&P 500 weakness today. On the Qs, I was basically watching this right here. This was the range we had, and basically we had moved higher and then tried again at this 215.50, multiple times held offer on that 215.50 area. Again, it's a sign of weakness. We saw the same thing yesterday, except that it was at 219.50 that offer would just not lift, and then slowly we faded down and trapped out those longs. And this was the same game today where they're holding those offers and then sooner or later we see a bear break, right? But I was betting that those offers were going to hold and then lift and trap out the shorts, but we didn't get that today. So the level for me was, as you can see, the low of the day was 214.27, but the level for me was this 214 and 3/4. That was going to be the make it or break it level for me. So if I was going to see that breaking, I was going to start to protect or to hedge against my short put trade, all right? And that's why trading requires you to always keep an open mind about understanding the market information objectively in both directions, right? So I had to be a good decision maker, and basically that's why it's so important to have a plan. And when you have a good understanding of how options work, you can easily create these plans for your trades in terms of how to hedge and how to kind of work around it. So basically my plan was to hedge the trade if Qs were going to break below this low, okay? So when we saw the break, I didn't do it on the initial break, but I waited a little bit. I waited for the retest. I was watching the tape, 214.75. I was watching to see how that retested. You can see that we retested it again, and then we slowly saw lower prices. So this right here was a signal for me to hedge against my short puts. So what I did was I actually shorted calls. I'll go back to the trade log, and you can see I sold the 286 calls at 11.25 when we started to see that bear break, and I sold 2 lots, exactly the same amount of lots I have on my short put side. I also covered my short put strike, not the long put strike. So basically the held bid I was watching, 284 and a quarter, we came down to that at a level and we bounced at first. So that's why I didn't cut the trade when we first saw that bounce, because it happened so many times that, look, there was a buyer here before. So I want to see if the buyer is still there before doing anything with my trades, right? So if I can see that the buyer comes in and then he drops and then he's out of there, there's no more buyer at 25, then I'm going to be getting out of this trade. I'm not going to stick around in this mess and see my trade go super red in my account. So what I did was, at that moment, like I told you, when I saw the Qs breaking that price, when SPY wasn't holding 25 anymore, I covered the short strike, the short put, and I sold calls above the high of the day at 286. Because if we're going to truly see a bear break here, it's likely we see a measured move, and 286 is going to expire worthless. So, okay, here at 11:31, I sold off one long put contract for a small profit. Now, at that point, I was still long one put option, okay? Now, this is where it gets interesting. So this is where you can kind of incorporate some creative ideas into your trading, right? So I'm short calls, and I'm holding a long put option expiring today. So what I did to have good behavior in the trade was I covered one, I sold one for a profit while SPY was moving lower, so that was a good thing. And then I proceeded to put in a protective stop on my other long put option. And how it happened was my stop got hit. So I put a stop in, but probably a little bit too close, because the market moved up to the 2-minute exponential and then we rejected it. So the market stopped me out right here at 11:37. And you can see that we weren't even able to get above that exponential moving average. And obviously, the better decision would have been to hold on to the put and have a wider stop, because we were likely going to see more downside now that we've broken out of this inside range here. So this weakness, this kind of bounce right here was still bearish, and I put my stop too close. And that's why, again, stop placement, guys, is one of the most important things in trading, and understanding. Obviously, you need to always use a stop. More importantly, you need to know where to put your stop. So basically, if I would have held on to that long contract, that contract was my average price of $30. It was trading around $50 here, and there was at least 100% in that contract. And it's still, right now, it's around 95. And I saw it trade around $1.20 somewhere here. So, you know, that's a bit of FOMO, and you can't do anything about it after except learn from it, right? So generally for next time, I'm going to leave a little bit more leeway in this type of trade. When I see this kind of setup where we have an opening range and we get the opening range breakout in either direction on the big sectors, like the XLF was giving it that bear break of the range. The Qs were also giving a bear break of the range. SPY was more likely to move lower. We came up here for a little bear flag, couldn't even close above the moving average, and then we saw aggressive selling continue. And I guess in the moment I was so caught up with the fact that I had sold these calls and that blah blah blah, I covered the short put, that I forgot to realize that holding the long put here was going to be a higher probability of winning. Anyhow, guys, so we live and you learn after every trade. Now SPY is just breaking lower. So these 286 calls that I sold, I'm holding them with a break-even stop, and I'll show you that real quick here. So you can see this 286 spread, I sold it at that moment, I collected that much, and I have a break-even stop at my entry price. So in the case that the market rallies extremely from 282 all the way to 286, then I will stop out of the trade. But other than that, I'm done for the day here, guys, and I'm not going to be messing around here. So the best case scenario right now is just SPY just chop around for the next 3 hours and we don't get back above 286. There's always a small chance of anything happening, but it's highly unlikely that that happens. All right, guys, so I wish you a great day. That was my trade review for today. I'm going to end the day slightly green if we don't move back up to 286. So take care. Bye.